The SoFi Technologies stock I shared with you just weeks ago is now up 45%, and it's making subscribers serious money. But here's what's even more interesting. This fintech powerhouse is trading at just $27 right now, and it's sitting on what could be one of the biggest opportunities in the digital financial services sector. Stick around because today we're breaking down exactly why this stock is positioned for a major move higher. Welcome back to Velocity Stocks. I'm Sterling, and I hope you're enjoying the stock picks we've been sharing with our community. Before we dive into today's analysis, I need you to do two things. Hit that subscribe button and turn on the notification bell. Why? Because we drop deep dive stock analysis like this every single week, and you don't want to miss the next opportunity that could deliver exceptional returns. Our channel is built on one thing: finding undervalued stocks, trading below their true potential, backed by real growth catalysts and strengthening fundamentals. We do the research so you don't have to. So let's get into SoFi Technologies. Before we talk about SoFi specifically, we need to understand why the financial technology sector is absolutely exploding right now. Here's the macro picture. Traditional banking is being disrupted. Consumers are moving away from brick-and-mortar banks toward digital-first financial platforms. This is a structural shift that's happening across every demographic, and it's creating massive opportunities for companies that can execute. The global fintech market is projected to exceed $800 billion by 2028. We see in compound annual growth rates of 15 to 20% across the entire sector. This isn't a small niche anymore. This is becoming the primary way consumers interact with financial services. Here's what's critical. Fintech companies are gaining regulatory approval, building trust with consumers, and expanding their product offerings. We're seeing integration of banking, investing, lending, and insurance all on a single digital platform. Companies that can consolidate these services are winning market share from traditional banks. The tailwind is real. Digital banking adoption is accelerating, regulatory clarity is improving, and companies like SoFi are positioned perfectly to capitalize on this shift. We're still early in this cycle, and smart investors are positioning before the institutional money floods in. Now let's talk about the company itself. We're analyzing SoFi Technologies Inc., ticker symbol SOFI, trading on the NASDAQ. SoFi was founded in 2011 and is headquartered in San Francisco, California. The company employs 5,000 team members and has built one of the most comprehensive digital financial platforms in the world. What does SoFi do? They operate a digital financial services platform offering student loan refinancing, personal loans, investing, banking, and insurance products. But here's the key difference. SoFi owns a national bank charter, which means they're not just a technology platform, they're a fully licensed bank. This gives them significant competitive advantages and profit potential that non-bank fintech companies don't have. Okay, here are the 7 reasons why SoFi could absolutely explode from current levels. First, severe valuation disconnect despite profitable operations. At just $27 with a $35 billion market cap, SoFi is trading at an incredibly depressed valuation for a company with positive earnings momentum. The market is not giving credit for the company's path to sustained profitability and scaling. Second, national bank charter creates significant competitive moats. SoFi received its national bank charter in 2024, which is a massive catalyst. This allows the company to offer traditional banking products with superior technology. Competitors without bank charters are limited in what they can offer. SoFi's charter is a structural competitive advantage that the stock market hasn't fully priced in. Third, multiple revenue stream integration is driving profitability. SoFi doesn't rely on a single product. The company is generating revenue from lending, investment products, banking services, and insurance. As the customer base grows, more customers use multiple products, creating extraordinary unit economics and margin expansion. This network effect is just beginning. Fourth, customer acquisition costs are declining while lifetime value is increasing. SoFi's customer acquisition has become incredibly efficient through organic growth and virality. As more customers use multiple products, the lifetime value of each customer increases dramatically. This creates a powerful flywheel that drives profitability. Fifth, personal loan originations are accelerating. SoFi recently expanded its personal lending business and is seeing exceptional growth. Personal loans are high-margin products, and the company's origination volume is growing 30 to 40% year over year. This is a near-term catalyst that will drive profitability and earnings growth. Sixth, all-time highs just $5 away. The stock hit an all-time high of $32 just a couple of months ago, in November 2025. We're retrading just $5 below that level. The technical setup suggests we could retrace back to that high and potentially break through. If we get any positive catalyst, we could see acceleration. Seventh, institutional adoption and analyst upgrades are just beginning. Wall Street is starting to recognize SoFi's profitability inflection. We're seeing analyst upgrades and institutional investors adding to positions. As earnings growth accelerates, multiple expansions should follow. Let's break down the numbers because they tell a powerful story. Current stock price, $27. That's right in the middle of the recent range, positioned between recent support and the all-time high. Market capitalization, $35 billion. Here's the critical insight. SoFi is now profitable and growing earnings 30 to 40% year over year. A $35 billion valuation for a growing, profitable fintech company with a national bank charter is actually quite reasonable. The market is not giving appropriate credit for the company's trajectory. Average trading volume, 53 million shares per day. That's exceptional liquidity. This is a major index-eligible stock with institutional ownership, options, chains, and real trading volume. You can accumulate or exit positions without any execution problems. Now let's look at the price action across different time frames. 1 month range. We've been trading between $25 and $29. That's relatively tight consolidation near recent highs. The technical setup suggests potential breakout. 6 month range, $20 and $32. Over the past 6 months, the stock nearly doubled from the lows. It hit the all-time high of $32 in November, pulled back, and is now consolidating. This is textbook breakout pattern. 1 year range, $10 to $32. Over the past year, SoFi has delivered a 220% return to investors. The stock more than tripled. But here's the key, the upside catalysts are still ahead. The national bank charter approval, expanded lending products, and profitability acceleration are just starting to impact the stock price. 5-year range, for $232. Since the company's lows 5 years ago, SoFi has increased 700%, but the 5-year high is $32, which we just touched. If the company can break above that level and establish new all-time highs, we could see accelerated buying from momentum investors and institutions. The technical chart suggests we're positioned for a breakout above $32. Before you make any investment decisions, I need to be absolutely clear. This is not financial advice. I'm sharing research and analysis. I'm not telling you to buy this stock. You could lose your entire investment. Interest rates impact lending, economics. If rates spike unexpectedly, loan demand could decline. If consumer defaults increase, loan portfolios could deteriorate. SoFi could face unexpected regulatory challenges. These are real business risks that could impact profitability and the stock price. Position sizing is critical. If you're considering SoFi, this should represent only a portion of your portfolio. I'm talking 3 to 5% of your investment capital for core positions, or 1 to 3% for more aggressive positions. This is a growth stock, not a defensive holding. Volatility exists. Technology and fintech stocks are volatile. You could see 10 to 15% swings in either direction within weeks. If you can't stomach that kind of price movement without panic selling, you need to size appropriately. Before you think this is a sure thing, understand the execution risks. SoFi needs to maintain its growth trajectory. The company needs to keep acquiring customers efficiently. The company needs to maintain credit quality and avoid massive loan losses. The company needs to stay ahead of traditional banks entering the digital space. These are real risks. Competitive pressure is intense. Traditional banks are investing billions into digital transformation. Companies like PayPal, Square, and others are also competing for the fintech market. SoFi needs to differentiate and stay ahead of better capitalized competitors. Do your own research. Read the quarterly earnings reports. Understand the balance sheet. Look at customer acquisition costs. Monitor loan origination volumes. Understand credit quality metrics. Make your own informed decision based on the fundamental data. Interest rate environment matters. SoFi's profitability is sensitive to interest rates. Higher rates could improve margins on deposits, but could also impact loan demand. Lower rates could increase loan demand, but compress margins. Interest rate movements are out of management's control. Let me recap what we've covered today. SoFi Technologies is a digital-first fintech company with a national bank charter, trading at just $27. The company has gone from $4 to $32 in 5 years, and is now positioned at an inflection point for profitability acceleration and market expansion. The stock is trading right below its all-time high, and the technical setup suggests potential breakout. The metrics support this. A $35 billion market cap for a growing, profitable fintech company with a national bank charter is attractive valuation. 53 million shares trading daily gives you excellent liquidity, and the price action suggests we're setting up for a move toward new all-time highs. Conservative price target. If the stock retests the all-time high and consolidates, we're looking at $32 to $34. That's an 18 to 26% move. Aggressive price target. If profitability acceleration drives multiple expansion and SoFi breaks above the all-time high with institutional buying momentum, we could see $40 to $50. That's a 48 to 85% move. Here's what I need from you. Hit that subscribe button right now. Comment below and tell me what you think SoFi's biggest competitive advantage is. And if this video provided value, hit the like button. It helps our algorithm reach more investors who are looking for this kind of deep analysis. Remember, do your own research, manage your risk carefully, and only invest money you can afford to lose. Position size appropriately. SoFi is a growth stock with both significant upside and downside potential. Next week, we're breaking down a healthcare technology company that just received FDA approval for a game-changing product, and the stock is still trading below fair value. The catalysts are aligning, and this could be a major opportunity. You don't want to miss that analysis. This is Sterling from Velocity Stocks. Thanks for watching, and I'll see you in the next one.